In an unexpected turn of events, the cryptocurrency market is grappling with significant turbulence following the announcement of new tariffs by U.S. President Donald Trump. In what has been described as a tidal wave of fear, the digital asset space, once buoyed by optimism after Trump's election victory, now faces a stark reality as prices plummet, leading many to speculate about the future of these burgeoning markets. Just days after reaching unprecedented highs, Bitcoin, which had surged to nearly $110,000, found itself sinking below the critical $100,000 threshold for the first time in weeks. As of this morning, Bitcoin is trading around $95,000, reflecting a near 10% decline. Ethereum and Ripple's XRP, along with other major cryptocurrencies, have experienced even steeper losses, with Ethereum dropping approximately 20% and XRP plummeting 18%. The total cryptocurrency market capitalization has shrunk by nearly $300 billion, raising alarms among traders and investors alike. The catalyst for this dramatic downturn appears to be Trump's executive order imposing hefty tariffs on goods imported from Canada, Mexico, and China. Set to take effect imminently, these tariffs include a staggering 25% on imports from Canada and Mexico, alongside a 10% tariff on goods from China. These trade barriers have not only rattled the stock market, where indices have also seen declines, but have also triggered a wave of selling in the crypto markets. Petr Koziakov, CEO of the crypto payment platform Mercurio, encapsulated the sentiment of the moment, stating, "A tidal wave of fear, uncertainty, and doubt has been unleashed across the cryptocurrency market. As the dust begins to settle, analysts are attempting to decipher the potential long-term impacts of these tariffs on the cryptocurrency landscape." The immediate reaction has been one of liquidations. Over $2.3 billion has been wiped from the crypto market in just 24 hours, with significant losses in futures markets that have seen over $600 million evaporate. Saul Ridwan, managing partner at Masterkey VC, observed that external pressures, like the U.S. escalating tariffs on Mexico, Canada, and China, are rattling global markets and spilling into crypto. The market response has been characterized by a risk-off sentiment, where investors are pulling back from assets perceived as volatile in the face of growing economic uncertainty. Andrei Fazanadzima, a research analyst at Bitru, noted that while many view Bitcoin as a hedge against inflation, the cryptocurrency remains highly sensitive to liquidity conditions and broader market sentiment. This volatility has left traders bracing for further fluctuations in the near term. Interestingly, there is a counter-narrative emerging from some analysts who believe that the trade war could ultimately be beneficial for Bitcoin. Jeff Park from Bitwise argues that while tariffs may be a temporary measure, the underlying demand for Bitcoin will drive its price higher in the long run. He stated both sides of the trade imbalance equation will want Bitcoin for two different reasons. The end result is the same: higher violently faster, for we are at war. In the backdrop, the Federal Reserve stance under Chair Jerome Powell has shifted significantly since the end of the previous administration. Powell's recent comments have opened doors for banks to serve crypto customers, marking a crucial pivot in regulatory sentiment that could influence institutional adoption of cryptocurrencies. This newfound support could prove pivotal if the market manages to regain its footing amidst the ongoing turmoil. As the dust settles from this latest upheaval, market participants are left to ponder the implications of Trump's tariffs, not just on the crypto space but on the broader economic landscape. With the potential for retaliatory measures from affected nations, the unfolding trade war could set the stage for a prolonged period of uncertainty. Investors are keenly watching for further developments, aware that the landscape could shift dramatically as geopolitical tensions escalate and economic policies evolve. In conclusion, the recent tariff announcements have ignited a storm of volatility within the cryptocurrency markets, leading to significant declines in major assets. As traders navigate this turbulent environment, the future of cryptocurrencies hangs in the balance, with the potential for both challenges and opportunities as global economic dynamics continue to unfold. The coming weeks will be critical in determining whether this is a temporary setback or a sign of deeper troubles ahead for the crypto market. Amid a turbulent start to February 2025, Bitcoin has experienced a significant downturn, dropping to a 3-week low as fears surrounding renewed tariffs imposed by former President Donald Trump send shockwaves through the cryptocurrency market. On February 3, Bitcoin's price fell sharply, testing the $91,000 mark before stabilizing around $95,000 after a tumultuous 14% decline over the past few days. This decline reflects broader anxieties in the financial landscape as global markets react to Trump's aggressive trade policies. The catalyst for this recent volatility stems from Trump's announcement of new tariffs, including a 25% levy on imports from Canada and Mexico and a 10% tariff on Chinese goods, set to take effect soon. Such protectionist measures have incited fear among investors, leading to a sell-off across various asset classes. Wall Street futures took a hit, with the Dow Jones Industrial Average dropping over 600 points, while the S&P 500 and Nasdaq also faced steep declines. The US dollar strengthened against a basket of currencies, further contributing to a risk-off sentiment among investors who are increasingly wary of potential economic instability. Petr Koziakov, CEO of the crypto payment platform Mercurio, characterized the situation as a tidal wave of fear, uncertainty, and doubt unleashed by the tariff announcements, which have added to existing concerns about prolonged higher interest rates and their implications for financial markets. Bitcoin, often viewed as a hedge against inflation and economic turmoil, appears to be caught in the crossfire, with traders noting that its price has dipped below the critical $100,000 threshold. However, the situation is not entirely bleak for Bitcoin enthusiasts. Analysts like Jeff Park from Bitwise remain optimistic, arguing that while tariffs may pose short-term challenges, the long-term outlook for Bitcoin remains bullish. Park suggested that the increasing use of Bitcoin in response to trade imbalances could lead to accelerated price growth, stating, "The end result is the same: higher, violently faster, for we are at war." In addition to Bitcoin's struggles, other cryptocurrencies have suffered even greater declines. Ethereum has seen a drop of over 20%, testing its August lows, while Ripple's XRP fell more than 30%. The meme-inspired Trump token, closely associated with Trump's political brand, also lost approximately 17% of its value. The cumulative effect of these declines has led to massive liquidations in the cryptocurrency market, with over $2.26 billion in leveraged positions wiped out in just 24 hours, illustrating the heightened volatility and fear permeating the ecosystem. Despite the bleak outlook, some analysts point to strong technical support for Bitcoin around the $92,000 level, which has historically acted as a reliable defense point. The upcoming Bitcoin halving event in 2024, combined with increasing institutional interest bolstered by the introduction of spot Bitcoin exchange-traded funds (ETFs), could provide a solid foundation for potential recovery in the future. As the cryptocurrency market grapples with these sudden shifts in sentiment, investors are advised to remain vigilant and strategic. The current environment is highly reactive, with sentiment swinging rapidly in response to macroeconomic developments. While the long-term prospects for Bitcoin may still be favorable, the immediate future will likely be characterized by volatility as traders navigate the complexities of a market increasingly influenced by geopolitical and economic factors. In conclusion, the interplay between Trump's tariff policies and the cryptocurrency market highlights the fragile nature of digital assets in the face of traditional economic pressures. How Bitcoin and its peers will respond in the coming days remains uncertain, but the resilience shown in past market cycles suggests that there may be opportunities for recovery ahead. As always, investors must stay informed and prepared for the unpredictable nature of this dynamic landscape. In a dramatic turn of events within the cryptocurrency landscape, the meme coin associated with former President Donald Trump, aptly named Trump, has experienced a severe downturn, plummeting over 70% since its peak just weeks ago. This sharp decline has coincided with broader turbulence in the crypto market, primarily fueled by Trump's recently announced tariffs on imports from Canada, Mexico, and China. The situation highlights the intersection of political maneuvers and financial markets, where sentiment can shift rapidly based on the actions of public figures. Trump, which is built on the Solana blockchain, reached a high of $75 on January 19 but fell to a low of $19.09 by February 1, marking a significant loss for many investors. This decline came on the heels of Trump's enthusiastic endorsement of the coin via a post on Truth Social where he declared, "I love Trump." Despite his efforts to rally support, the coin's value continued its descent. Criticism mounted from notable figures such as Anthony Scaramucci, founder of Skybridge Capital, who accused Trump of attempting to pump the token, suggesting that such promotions may have contributed to its rapid decline. In addition to the struggles of Trump, the entire cryptocurrency sector is feeling the strain. Major currencies like Bitcoin and Ether also faced declines, with Bitcoin dropping to approximately $95.000 and Ether experiencing a staggering 12% decrease. The broader crypto market, which has seen fluctuations often tied to investor sentiment and macroeconomic conditions, is now grappling with fears spurred by the potential for a trade war. Analysts have pointed to the newly imposed tariffs, 25% on imports from Canada and Mexico and 10% on Chinese goods, as factors that could disrupt economic stability and investor confidence. The trading volume for Trump has fallen dramatically, down by 90% since Trump's inauguration. This lack of investor interest indicates a growing skepticism about the coin's long-term viability. Meanwhile, daily liquidations in the market have surged, with over $15 million wiped out in a single day, further underscoring the fragility of investor sentiment in the current climate. As the coin's market rank slips, some traders are still viewing the downturn as a buying opportunity, citing potential technical patterns that suggest a possible rebound. The current climate has led to a wave of uncertainty not just in the realm of cryptocurrencies but across global financial markets. The imposition of tariffs has led to a risk-off sentiment where investors retreat to safer assets, causing a sell-off in riskier investments like cryptocurrencies. The US dollar is strengthening, further pressuring crypto prices as many investors seek refuge from anticipated economic instability. Amidst this turmoil, some analysts maintain an optimistic outlook for Bitcoin, suggesting that while the immediate future may be rocky, the long-term potential for the asset remains strong, particularly as institutional adoption continues to grow. However, caution is warranted as the market navigates the ramifications of political decisions and their impact on economic conditions. The intertwining of cryptocurrency and political action has never been more evident, as Trump's tariff policies and promotional activities have led to tangible consequences in the markets. As investors watch closely for signs of recovery or further decline, the coming weeks will be crucial in determining whether Trump and the broader crypto market can stabilize or continue to suffer from these compounded pressures. With volatility expected to persist, the future of these digital assets remains uncertain, but the ongoing developments will undoubtedly shape the narrative in the months to come. In a turbulent twist of events, Ethereum ETH has experienced a remarkable recovery, rebounding nearly 20% from a flash crash that saw its price plummet to $2,125. This volatility within the cryptocurrency market is emblematic of broader economic pressures, particularly as fears surrounding impending tariffs introduced by former President Donald Trump have sent ripples through global markets. On February 2, 2025, Ethereum, along with other cryptocurrencies, faced significant sell-offs as the market reacted to news of a potential trade war fueled by Trump's announcement of steep tariffs on imports from Canada, Mexico, and China. The tariffs, set to take effect imminently, were seen as a catalyst for market instability, leading to over $2 billion in forced liquidations across the crypto landscape. According to data from various cryptocurrency exchanges, Ethereum was among the hardest hit, experiencing a sharp decline that raised alarm among investors and analysts alike. Petr Koziakov, CEO of the crypto payment platform Mercurio, noted in a statement, "A tidal wave of fear, uncertainty, and doubt FUD has been unleashed across the cryptocurrency market after U.S. President Donald Trump's Friday tariff announcement." This sentiment encapsulates the anxiety gripping the market as traders grapple with the implications of increased tariffs and the potential for a prolonged global economic downturn. despite the initial chaos. Ethereum's swift recovery speaks to the resilience of the cryptocurrency. It surged back to approximately $2,572, reflecting a broader trend of volatility that characterizes the crypto markets. Analysts suggest that this rebound may be indicative of a market that is still finding its footing amidst external pressures. The fluctuations highlight the inherent risks associated with investing in cryptocurrencies, which can be exacerbated by geopolitical events. Interestingly, while Ethereum and many altcoins faced steep declines, Bitcoin, a leading cryptocurrency, managed to weather the storm comparatively well, hovering around the $95,000 mark after dipping below $91,000. This divergence has sparked discussions about the evolving dynamics within the crypto space, particularly as institutional adoption of Bitcoin continues to grow. Federal Reserve Chair Jerome Powell's recent remarks about allowing banks to engage with crypto customers signify a shift in regulatory sentiment that could bolster Bitcoin's position as a store of value. Market analysts are now watching closely as the implications of Trump's tariff policies unfold. Some experts believe that the volatility could ultimately benefit Bitcoin, as it may be viewed as a hedge against the economic uncertainty that tariffs could bring. Jeff Park, a notable analyst with Bitwise, stated, "While both sides of the trade imbalance equation will want Bitcoin for two different reasons, the end result is the same: higher violently faster, for we are at war." As the cryptocurrency market continues to react to these unfolding events, traders remain cautious yet hopeful for a more stable future. The interplay between crypto assets and traditional financial systems will be critical to monitor, especially as major players on Wall Street increasingly embrace Bitcoin and Ethereum, potentially signaling a new era of acceptance. In conclusion, the recent upheaval in the cryptocurrency market underscores the delicate balance between innovation in digital assets and the unpredictable nature of global economic policies. As Ethereum recovers from its flash crash, the broader implications of tariff-induced volatility will likely shape market dynamics in the coming weeks. Investors and analysts alike will be keenly observing how these developments influence the trajectory of cryptocurrencies, particularly as regulatory landscapes evolve and institutional interest grows. The future remains uncertain, but the resilience displayed by Ethereum and Bitcoin hints at a market that is far from done with its transformative journey. In a landscape marked by volatility and uncertainty, the cryptocurrency market finds itself at a significant crossroads. Following the recent announcement of steep tariffs by President Donald Trump on imports from Canada, Mexico, and China, the digital asset realm has been rocked, triggering a massive sell-off that has erased hundreds of billions from the market capitalization of cryptocurrencies. As Bitcoin, Ethereum, and other major players plummet, some analysts are questioning whether innovative solutions such as Solaxi's crypto presale could provide a lifeline for Solana and its community. The backdrop of this financial tumult is a looming trade war, with the tariffs set to take effect imminently. These new measures have not only sent shockwaves through the crypto sphere but have also led to significant declines in traditional stock indices, including the S&P 500 and Nasdaq 100. Bitcoin, which had recently surged to nearly $110,000, saw its value plummet to just over $91,000 before a slight rebound, illustrating the frantic nature of market sentiment. A tidal wave of fear, uncertainty, and doubt has been unleashed across the cryptocurrency market, remarked Per Koziokov, CEO of the crypto payment platform Mercurio, highlighting the pervasive anxiety among investors. As the crypto market grapples with these pressures, Solana has managed to maintain a comparatively stable position, down only 6% during this turbulent period. This resilience has sparked speculation regarding its potential to surpass Ethereum as the leading smart contract platform. Solana's community is now looking towards Solaxi's presale as a possible avenue for recovery and growth amidst the widespread downturn. The broader implications of Trump's tariff policy extend beyond immediate market reactions. Federal Reserve Chair Jerome Powell has indicated that banks are now permitted to engage with crypto customers provided they adequately assess the associated risks. This marks a notable shift from the previous administration's stance. which was characterized by a more restrictive approach towards digital assets. Powell's comments were perceived as a green light for Wall Street's increasing involvement in cryptocurrencies, further complicating the market's dynamics. Yet amid this backdrop of potential stabilization and institutional acceptance, voices of caution persist. Analysts warn that the ongoing trade tensions and rising interest rates could foster an environment of prolonged volatility. While both sides of the trade imbalance equation will want Bitcoin for two different reasons, the end result is the same: higher violently faster, for we are at war, stated investment guru Jeff Park, suggesting that the very factors creating instability could paradoxically drive demand for Bitcoin as a hedge against economic uncertainty. The juxtaposition of opportunity and risk paints a complex picture for stakeholders in the crypto market. While some view the current downturn as a chance to accumulate assets at lower prices, others express concerns over the long-term viability of certain cryptocurrencies in light of regulatory scrutiny and market pressures. The recent investigation into Binance by French authorities for alleged money laundering and tax fraud underscores the increasing regulatory attention that could reshape the crypto landscape. As the dust settles from this latest upheaval, the future of cryptocurrencies like Solana remains uncertain but filled with potential. The Solaxi presale, if successful, could not only bolster Solana but also reaffirm the community's resilience in the face of adversity. Investors and enthusiasts alike are watching closely, poised for what could be a transformative period for the entire crypto ecosystem. As we move forward, it will be crucial to navigate these evolving dynamics, balancing innovation with the realities of regulatory and economic challenges that lie ahead.